Patrick, what's your take as to how optimistic we should be going into the new year?
Well, I don't think investors are looking for what can go wrong. Right now, we got data this morning out. Industrial production continues to look very strong. The housing data also looks firmer. Both of those are allowing investors to take a more positive tone for the market and is really going to be the catalyst for what we expect to be another great year in 2020.
We were talking earlier a little bit about the federal deficit and debt. I know that you're keeping a close eye on bonds and this search for higher yield. How do you factor that into the short term that you're looking at early in 2020?
Well, it's interesting for me. If you take a look at what the trade has been in December, you've seen a rotation out of, what I would call the safe haven bonds, both U.S. Treasuries as well as investment-grade corporates and into high yield. And that is also very supportive for equities. So people are actually willing to accept more risk. There's been a few things that have cleared out. We've got the first phase of the China deal. People are looking forward to the end of the year. We're up 20%. I don't have the markets overbought at all here. We've still got some room to run. The S&P 500 for me and my work can run all the way up to 3270, somewhere in that range before we even get there, and the Dow above 29,000. So when you factor all that stuff together, again, in my melting pot, I think that despite federal deficits, despite what's happening with bond prices, interest rates, I think we're still very supportive for running here further into 2020.
Well, now the FedEx trading down 3%, numbers just out. We're digging into them. We'll have you all the details you need to know in just a moment. Keith, just want to also mention you've been looking at commodity prices as well. What's that telling you?
Well, again, the same sort of story. People are getting comfortable with the global economy. Copper is overbought in our work. Oil prices are surging as well. And also, when you look at it, it's not necessarily a commodity, but semiconductors, not only have they been on fire for the year, but in December, they have just taken off. And I think a lot of that has to do with the China trade negotiations, but that also is a harbinger for what people really think about the global economy. Semiconductors, microchips are in everything that we use around the world, especially in retail products. If we think we're going to sell more semiconductors, which they think they are, then that also bodes well for the global economy, which bodes well for all risk assets, including equities.